Somewhere around a year ago, Jensen Huang suggested that I would have an AI agent someday, and I fixated on that and started trying to figure out how exactly that would happen. And now I have two AI agents, and that's what's made possible for me to double my portfolio in a matter of 6 months. And it's all by finding stocks like ASTS, which is up 85% this month, and recognizing that all I had to do was create a prompt that explained to Samantha, my AI agent, what a growth stock looked like and what its characteristics were as it went through adolescence into maturity. And I used some growth stocks as models. And so now I have the ability to identify stocks. So where I now believe my primary goal initially was to double my portfolio every 3 years. As it is, it's doubling every 6 months. And with that, I've got a unique way to generate income, to generate financial growth, to generate wealth. If you use the math, if I live long enough, I'll become a billionaire. I mean, there's nothing that can stop it, unless, of course, AI doesn't work for some reason. But all I've seen is it just keeps getting better. So what I then do is Samantha creates me the document that gives me the details and the justification why she believes the stock is going to go up. And then what I do is put it into another AI agent and turn it into a podcast. And so I believe what I want to do is one, become a billionaire by growing my portfolio, but also I want to affect the world in a very positive way before I leave. And that is to bring on a specified number of people that I can help make millionaires and maybe billionaires if they live long enough by teaching them how to do this. So the best way I can do that is to serve as an example and then also give you access to Samantha and Bard as they explain how ASTS is going to achieve my goal of doubling in 3 years. And just at the pace it's going, it will probably double in 6 months. So because it's up 85% in the last month. So what I want to do is let you listen to my two AI agents, Samantha and Bard, to tell you something about ASTS. Now, the reality is I have to limit the number of people that have access to this knowledge. And that's because ASTS only has so many shares. They're not Apple and they're not Google. They only have so many shares. And so if I let too many people know why they should buy ASTS, everybody will go buy it. And we, the small group, will lose our edge. Now, I have a number that I'm willing to share this with. I'm not there yet. So I want you to hear this. And if it sounds like something you want to be a part of, then come join our tribe. Our tribe costs $60 a month. And if you can't make, you take what you've got now invested and say, what happens if I double that every 6 months? What is it going to be worth in 3 years? And then you ask yourself, if that's true, should I sign up for $60 a month to see if it happens? And if it doesn't, I can cancel at any time. Listen to Samantha and Bard.
Welcome, welcome, welcome everyone to The Deep Dive. I'm Samantha, and today we're tackling a really fascinating company, one that truly reaches for the stars. This is actually a special request from Kerry over at Best of Us Investors. He asked us to really dig into the analysis they've done on AST Space Mobile, that's ticker ASTS. And joining me to break it all down, connecting those crucial dots, is Bard.
Great to be here. Yes, our mission, as requested, is to unpack this detailed analysis of AST Space Mobile. And it's quite a stock. The analysis nails it by calling it a mix of sky-high ambition and, well, earthbound risks.
Absolutely. And it's such a compelling story. I mean, what AST Space Mobile is trying to do, it's connecting standard smartphones, like the one in your pocket, anywhere on Earth, directly from space.
No special gear, no satellite phone needed, just your phone working, in the middle of the ocean or deep in a national park.
Exactly. But as you'd guess, with something that big, the stock's been incredibly volatile. Definitely a high-risk, high-reward kind of situation.
Yeah.
So let's get into it.
Okay, so for anyone maybe just hearing about AST Space Mobile, let's cut through the buzz. What exactly are they doing with this space-based cellular broadband? How does it work for like a normal phone?
Right. So think of it like this. AST Space Mobile is building essentially a network of cell towers in low Earth orbit. Huge satellites. Their prototype, Blue Walker 3, it unfurled an antenna in space about the size of a tennis court. That massive thing acts like a cell tower talking directly to standard phones on the ground.
And that's the critical piece, isn't it? The standard phone part. Not needing some special satellite phone or, a dish. That's the real game changer here.
Precisely. No changes needed for you, the user. And their business approach is also pretty smart. They're not selling directly to us. It's a wholesale model. They partner with mobile network operators, MNOs, think AT&T, Vodafone, companies like that. Over 50 partners already.
Ah, okay. So they sell the service to the carriers. Exactly. They provide coverage extension. So AT&T or Vodafone can use ASTS to fill in their dead zones, rural spots, oceans, developing areas where building towers just doesn't make sense economically. It gives those carriers a new service to offer, tapping into places they couldn't reach before.
And the potential market size for something like that?
Okay.
It just sounds astronomical. We're talking the global telecom market, which is what, over $1 trillion?
It's immense, yeah. Around $1.5 trillion globally. But it's not just about grabbing a slice of that pie. Think about the human impact. Roughly half the world's population still lacks broadband. If ASTS pulls this off, it's not just market share, it's potentially connecting billions of people for the first time.
Wow.
Their first phase alone targets 49 countries near the equator. That's about 1.6 billion people right there. Imagine this shift when those regions get reliable mobile internet.
That really puts the sky-high ambition in perspective. Okay, but let's ground ourselves now with the earthbound risks, the financials. A grand vision is one thing, but what does the balance sheet actually say for an early-stage company like this?
You got it. The financials tell a really crucial part of the story, especially when they're investing so heavily. The analysis breaks it down into grades. First up, profitability. It gets an F.
Ooh, an F?
Yeah, not unexpected for where they are, but still stark. They're pre-revenue, essentially. Only brought in about $247 million in Q1 2025. They lost $45.7 million last quarter and over $300 million in the last year. Margins, return on equity, all deeply negative.
Yeah.
And profits, not expected until 2027 at the earliest. It really shows the scale of the upfront cost.
Okay, an F and $300 million in losses,
Yeah.
even for pre-revenue, that's significant, raises flags about just how long they can keep going.
Right.
So they're burning cash fast, but do they actually have enough money to see this through? You mentioned liquidity.
Right, and that leads us to liquidity, which gets an A. This is their strong suit right now, the safety net, really. They had $874.5 million in cash and equivalents at the end of Q1 2025. Their current assets are way higher than their current liabilities. The current ratio is well over 3x.
Okay, so a big cushion.
A very big cushion. It's expected to fund about 2 years of pretty intense spending. And they've got access to more cash, like a $460 million convertible note. So yes, despite the burn rate, they have a runway.
That's definitely better. But are they just loading up on debt to fund this? How's the solvency picture?
Solvency gets a B. That's adequate for now. Looking at Q2 2025, they had about $1.37 billion in assets against $603 million in total liabilities. Debt to equity is moderate. The real solvency question isn't today's debt, it's tomorrow's funding needs. They'll probably need another, say, $500 million plus by 2026 to finish the initial satellite deployment.
And how are they planning to get that? More debt? Selling more stock?
Management says they're focused on non-dilutive options, meaning funding that doesn't involve selling more stock and diluting current shareholders. That's definitely something investors will be watching closely.
Okay, makes sense. And lastly, efficiency. With minimal revenue and all this spending, how efficient are they actually being? Is it just money out the door?
Efficiency gets a D. Again, largely because they're pre-scale. Trailing 12-month revenue is under $5 million, while operating expenses topped $250 million. They've sunk over $1 billion into R&D and infrastructure already.
$1 billion.
Yeah. But it's not all bad news on efficiency. The analysis notes some internal improvements, like they managed to cut their quarterly R&D spending late last year through vertical integration, making some components in-house. So while the big picture metrics look weak now, there are signs they're trying to control costs internally.
Okay, with all that spending focused on growth, the rule of 40 often comes up. You know, that benchmark where revenue growth rate plus profit margin should ideally hit 40% or more. How does ASTS stack up there?
Right now, they fail it spectacularly, which, again, you'd expect for a pre-profit company. Their revenue growth for 2025 might be, say, 700% plus, but their EBITDA margin is like negative 100%. So the sum is way, way below 40.
Okay, so not relevant yet, but what about down the road?
That's the key. Analysts are projecting massive growth if they execute. We're talking maybe $300 million revenue in 2026, jumping to almost $1 billion in 2027, maybe over $2 billion by 2028. That's a compound annual growth rate, over 100%.
So the potential is there to meet the rule of 40 later.
Potentially, yes. Profitability will lag way behind revenue because of the huge upfront costs. But if they hit, say, 50% growth annually by 2027 or 2028 and manage even break even to maybe 10% margins, then yeah, they could definitely satisfy the rule. The focus now is purely on scaling that top line.
That path sounds promising, but growth doesn't happen in a vacuum. What about competitors? Are they really alone out there, or is someone else trying to build this bridge too?
It's a really interesting landscape. Right now, ASTS does seem to have a first-mover advantage. There aren't any direct public competitors doing exactly what they're doing broadband direct to standard phones.
What about companies like Iridium or Globalstar? They do satellite stuff, right?
They do, but it's different. They focus on niche markets, usually requiring specialized satellite phones or specific IoT devices, and generally offer lower bandwidth. It's not the same mass-market standard phone play.
But surely the big players are looking at this. You hear about Starlink and T-Mobile or Amazon's Kuiper.
Definitely. We've got emerging players like Link Global. They've done some tests, even sent texts from space. But they seem to lack the capital and scale ASTS has right now. Then the giants. Starlink, yes, they have a deal with T-Mobile, but their current setup, and even the near-term plan, seems focused on lower bandwidth stuff, like messaging first. Full broadband to standard phones at scale looks further out for them. And Amazon's Project Kuiper. Their initial focus seems to be more on user terminals, like small dishes, not direct-to-phone yet.
Okay, ASTS really is kind of out front in this specific niche for now.
It seems that way, yeah. Like they're the only ones seriously building this particular type of bridge right now.
Given that unique position, does being independent make them vulnerable? Without the backing of a huge parent company, any talk of them getting acquired or merging?
The analysis suggests no major M&A is really on the horizon in the short term. Their whole focus is just building the network, getting those satellites up and running. Sure, you could imagine a scenario way down the line where if they become essential, maybe a big telco or tech giant tries to buy them. But for now, they seem determined to stay independent, relying on those strategic partnerships for support, not looking for an exit.
Which means their own technology and their ability to defend it, their moat, is absolutely critical. So let's talk about that moat. What's the core tech breakthrough and how hard is it for someone else to copy?
Okay, this is where it gets really cool technically. The big proof point was Blue Walker 3. That test satellite back in April 2023 made the world's first 5G call from space directly to a regular off-the-shelf smartphone.
Not just a call, right? Didn't they do data too?
Exactly. Data downloads, video streaming, all using standard mobile frequencies, no phone mods needed. It proved the core concept works. Overcoming the physics of that Doppler shift, signal power over distance, was a huge technical hurdle. No one else has publicly demonstrated that capability yet with standard phones.
And now they're moving beyond the prototype.
Yes, now it's about deploying the operational satellites, the Bluebirds. The plan is ambitious, over 60 satellites by the end of 2026 for continuous global coverage. They're targeting initial commercial service sometime in 2025. And these new Block 2 Bluebirds are apparently 10 times more powerful than the earlier designs, thanks to custom chips they designed in-house. They're aiming to ramp up production to 6 satellites a month.
That's serious scale. But back to the moat, how strong is it really? Is it just the tech?
It's several layers deep, actually. First, the R&D investment, over $1 billion spent over 7 years. That resulted in a big intellectual property portfolio. We're talking 156 granted patents globally, over 3,400 patent claims filed. It's like they didn't just build the first highway, they patented the concept of driving on water and got the first permit. It makes it very tough for others.
Okay, patents are one thing. What else?
Second, regulatory hurdles. They were the first to get key approvals, like from the FCC here in the US, to use standard mobile spectrum from space. Navigating that complex global regulatory landscape is a huge barrier to entry for anyone following. Spectrum is scarce.
Right, the red tape can be a moat in itself.
Definitely. And third, there's the partnership ecosystem. By partnering with over 50 MNOs, they basically get instant access to billions of potential customers through existing carriers. It creates this powerful distribution network that would be very hard for a competitor to replicate or displace.
And those partners are putting money in too, right? Like Google.
Exactly. Strategic investments from Vodafone, Rakuten, and yeah, most recently, Google put in over $200 million just this past July. That signals strong validation and maybe hints at future integration, perhaps with Android or Google Cloud. It's a strong coalition back.
Okay, the podcast goes on, and they actually give you the prices that ASTS is going to be at the end of 2025, 26, 27, 28, so that you know exactly what you might expect from them. And what we do is we update it every 90 days when they have another earnings call, so that you can keep up as to is it maxed out? Is it just getting started? Where do I get in? Where do I get out? That's what AI is all about. Now, what you got to understand is I can't let everybody have access to this information because ASTS only has so many shares. If 10 million people know about ASTS and what its price is going to be, well, that's going to drive the price beyond its actual value. But as long as we keep it within a closed group, we'll allow ASTS to achieve its value, its real value, and we'll benefit from it. So I figure I don't know how many millionaires I can make over the next 3-4 years, but it's a substantial amount, and it's all based on artificial intelligence. So if you want to become a part of this, if you want to become a millionaire, if you want to use artificial intelligence to its max to make you a better investor, just come to our website, Best of Us Investors. You'll find a link in the description. It'll take you to a landing page, and it'll give you some more details about what we've done in the past and what we see in the future and what some of our current tribe members think about the program. And then you make a decision. And it's not really a decision about spending $60. It's a decision about what you want to do with the rest of your life.